DC Russ line mentality. Hey, that should be my theme song. Anyway, coming to you live. No, this isn't live. This is pre-recorded. Yes, by the time you see this, I might not even be alive. All right. Okay, so I have a confession to make. The confession is I used to not really be that smart. Seriously, like I'm smarter now than I ever was. And it's because of my New Year's resolutions. A lot of my New Year's resolutions had to do with building my body, strength training, cardio, all right? Doing a little bit of yoga, maybe a little bit of meditation, some other healing modalities in there. But essentially, I started focusing on my body more. And I had to because I work at home and I sit on my ass all day. But I was like, I can't let my body go to hell. I got to do something, and I got to make sure I do it every single day. On a regular basis for at least a year to see what the consequences, what the effects of that would be. And so I devised a series of New Year's resolutions that I have followed faithfully up until now and am still going forward with that. And they have been largely focused on my body, which had the unforeseen side effect of changing my entire mentality, changing my brain, and essentially making me more intelligent, which is crazy because I've heard many times that your mind and body are connected and, a healthy body is a healthy mind and vice versa, but I never really understood what that meant until I experienced it for myself when I was lying in bed just tonight when I realized I now understand something that I could never understand before. I just got this flash of insight to do a Google search about the 2007-2008 U.S. housing market collapse, and I got a confession. I couldn't understand that. People have tried to explain that to me so many times. I actually have an uncle that works in distressed mortgages who's tried to explain that to me so many times, and I could just never get it. I started my career in finance. I studied this stuff, all right? I read about it so many times. I watched The Big Short, which is supposed to make all this super simple and straightforward. Couldn't understand it. I mean, little bits and pieces here and there. But, I'm not alone. There's a lot of people that don't understand that, which is crazy because it's not complex, all right? It only seems complex because the people who are putting together all these terms are doing that to sort of make your eyes glaze over so that you can't see them reeling in all these profits because ordinary folks like you and me don't understand how it all works. But it's actually really simple, okay? And you know that you understand something when you can explain it in simple terms. So let me explain this to you, okay, about the housing collapse, all right, and how that happened. All right, so here's what went on. You have a loan, a home loan, a mortgage, and you're responsible for paying that off. Now, if you're really qualified to pay that off based on your income and your past and your credit score and blah, 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 then that is called a good rated loan. That's good rated. There's great rated loans, and then there's bad, shady rated loans. So let's pretend these loans are suckers, okay? Basically, there were investors that are buying these suckers thinking that the housing market is invincible and there's no way that these suckers could go bad. So they put a whole bunch of these suckers in boxes and then they sold them to investors who thought they were going to make a return on that investment as the suckers continued to come more into fruition. However, as that started happening, there was a limit. There began to be a limited amount of good suckers. All right, there's only so many houses and so many mortgages that you can write. So, they started giving loans to unqualified buyers in an increasing fashion, which is essentially taking bad suckers and mixing them in with all the good suckers and bundling them up into a box and wrapping duct tape around it and then selling them as if this bundle of suckers is really good, when in actuality there's a lot of bad suckers in there. Like they're old, they're expired, they've been sitting in the sun, they don't have wrappers, they got missing sticks, I don't know. They're just not good suckers. But they bundled them all together, and then they even took those bundles, those boxes of suckers, and they put them into even bigger boxes. So now you've got giant super boxes of thousands and thousands of suckers. Some of them are good, a lot of them are bad, and the guy who's selling them, of course, is writing with a big Sharpie on the top of the box, AAA, which means these are the best suckers. You're not going to get any better suckers than these. And the people who were buying these are the real suckers because they believed that salesman, and they didn't go in and open the box and look through and look at all the individual suckers to realize that there's actually a lot of bad suckers in here. And a bad sucker is just a person who has demonstrated that they're not really going to be able to pay for their mortgage over time, or there's a high probability that they're going to default, which means not be able to pay for their mortgage. So essentially, you just had a bunch of salespeople bundling all these suckers together and lying about the quality of them. And that's what created the collapse. And so there were a few very thoughtful people who weren't even really that intelligent. They were just not brainwashed by this pervading notion that the American housing market is steel and unbreakable, and mortgages are the safest investment that you can invest in, and you just never go wrong when you buy bundles of these suckers. They're just amazing suckers, and you will just never go wrong because they don't go bad. These suckers do not go bad. In fact, they have sugar in them, and sugar is a preservative. So you guarantee that if you buy these suckers, you are going to only increase your wealth. All right. So that was the notion. And there were a few intelligent and also thoughtful people who were not brainwashed by that notion. And then they started investigating. They started to open up these boxes of suckers, which took a lot of time. It took a lot of reading, a lot of research, but they did it. And they found out that, hey, man, this is kind of a scam. We're boxing up these suckers and selling them like they're grade AAA, and they're just not. A lot of them are bad, which means they're going to lose their value, which means a lot more are going to expire and disintegrate and get sticky and melt and whatever, analogy you want to use. And so they went to the banks and they basically shorted. It's called shorting the investment. They shorted these investments. That was a concept I couldn't wrap my mind around. How does shorting work? How do you buy low and sell high, but do the selling first on things that you don't even have? Well, it's really simple. It's so simple that anybody can understand it. The way a short works is it's just an agreement is all it is. It's just if I went to you and said, hey, that sucker you got there is going to go bad. It's going to go bad before you get to eat it and enjoy it. And you're over there like, no. You see, I've been holding this sucker for days and days, and this is just an amazing sucker, and I can't wait to eat it. I'm like, all right, listen, I'll pay you money for every day that sucker doesn't go bad. But when it does go bad, then you got to pay me a huge sum of money. And you're like, of course, yeah, I'll keep taking your money. Like, that's highway robbery, all right? I'll take your money every single day because this sucker is not going bad. It's got sugar. Sugar is a preservative. And so that's how it worked. So there wasn't actually even a quote unquote vehicle. They call it a vehicle, which is essentially just an agreement. There was no predefined template agreement for this kind of a transaction, for this kind of an idea. So these people who saw the housing collapse coming, they invented a vehicle, which is essentially just an agreement that says, hey, when these loans default and they go bad, you're going to pay me this much money. And, just like with anything, you don't get something for nothing. They're not just going to like, okay, if that happens, we'll pay you money. They're like, well, what's in it for me? Okay, well, I'll pay you money every day that they don't go bad. And they're like, are you serious? These are not going to go bad. They have sugar. Sugar's a preservative. But they were wrong, obviously. And they were brainwashed by the idea that housing mortgages could never go bad. People live in their houses. Of course, they're going to pay for their houses. Yeah, well, when you take into consideration a lot of economic factors and the fact that that people were buying houses that weren't qualified to buy houses, all of a sudden, whether they want to pay for their mortgage or not is kind of irrelevant. All right, so they thought humans were logical, rational creatures, and that everything that was being done was completely made sense. But no, it was basically just a bunch of greedy people being selfish and shady, and that's really what created the collapse. And the people who knew that they were doing that were just brushing it under the table so they can continue to make money. It's really that stupid simple. And so, in the same way that you pay for health insurance, these people that saw this error in the system basically opened an insurance policy. All right, that's all it was. Except instead of insuring their bodies, they were insuring the quality of the suckers. So they said, "Hey, I'll pay you this much money every month, but when these suckers get sick, all right, and they need hospital attention, all right, I'm using the analogy, but when these suckers go bad, then you got to pay me a huge amount of money." And that's exactly how your health insurance works. It's not some big, complicated, convoluted thing on a high level. Really, all it is a gamble. It's just a gamble. You're just making an agreement with the insurance company that I'm paying you this premium every month because I'm willing to bet that I'm gonna get sick, or that at least that it's possible that I'll get sick. And then when I do, you got to hold up your end of the bargain. You got to pay me for all of my medical bills. Same thing. It's not some complicated financial instrument. It's just an insurance policy where this guy was like, I'll pay you this much money every day that these loans don't go bad. And because the banks didn't think they were ever going to go bad, they were like, okay, free money. Yay, keep paying us this money because they're never going to go bad. But if they do go bad, you got to pay me this. Yeah. Anyway, get to the part where you're paying us money every day. And so he was able to basically name his own price because there was no way in heck that these loans were going to go bad. Who doesn't pay for their mortgage, right? Well, people who can't afford their mortgage, okay? People who are subject to fluctuations in the economy, including inflation and changes in the career of jobs and employment. I mean, so many things that were just grossly overlooked, all because of one thing. All right. I call it the yay factor. All right. The people who were selling the boxes of suckers were like, yay. I mean, I know just put the bad ones in there. I mean, I know, but yay, I get money. And then the people who were buying the houses were like, yay, I get a house. And then it just keeps going from the smallest level all the way up to the biggest level of just a bunch of people being like, yay. Yeah, I mean, let's not pay attention to the bad part, okay? Let's not be negative, okay? Can we just all be positive? Let's not talk about how this is a bad idea, cause yay, and that's how it happened. It's that simple. It's that simple. It's not just this huge convoluted system that you can't understand. And the way that I finally understood it was tonight when it all clicked for me, when I realized when I was lying in bed how simple this was. And that's when it occurred to me. I can understand things now that I couldn't understand 6 months ago or a year ago. All right. And that's because of the changes I've made. And one of the biggest components of that change was focusing on my physical body and my physical well-being. And I'm just so excited because if I keep this up, where am I going to be in 5 years or 10 years? Where can you be in the next year? And you don't have to start big. You just have to start small. And people don't start small because they don't see the effects of it right away. But the effects are, the real effects are the ones you can't see. The real effects are the ones you can't see, okay? You might do 5 jumping jacks and your body is not going to change. You might do 5 million jumping jacks and your body might not change that much. But if you do 5 jumping jacks a day for an entire year or even an entire month, or let's just keep it simple, do 5 jumping jacks for 1 week straight and be very, very, very aware of the changes. Kind of like I said in my last video, do something, put your mind to committing to something, even if it's something small, and then tune your brain to be hyper aware of the changes, not your bodily changes, not the changes in your environment, the changes in your mind and in your spirit, the changes in your perspective. And that's really the key, perspective. When you do something, even if it's something small, and you do it over and over and over, a lot of things change almost instantly that you can't really see. But if you keep doing them every day and you look back 6 months earlier, you're going to notice a huge change. And that change is caused by a shift in your perspective. Your perspective changes. The way that you look at things changes. Now, all of a sudden, because you've been doing these 5 jumping jacks every single day, You know that you can set your mind to something, anything, even if it's something small. And that builds confidence in you. That builds a whole new reality of what you think is possible or doable or feasible in your own life, which then allows you to bite off just a little bit more. So you don't have to make huge sweeping changes. Okay, you can start with small changes and gradually build up. The point is not to get the results on a physical level. That's not the point. The point is to get the results here. All right. And you can do that in a really, really short amount of time. You'd be surprised how far you can go in a very short amount of time if you just do one thing and commit to that one thing every single day. It doesn't have to be big. Trust me, do it. And then at the end of that short amount of time, whatever you define it to be, look back and be like, how do I feel different? How do I think differently? How has my perspective shifted? And if you do that and you continue to do that and increase your perspective as you go through life, your existence will be unrecognizable in a very short amount of time. And I just think that is an incredible feature that human beings have. And it's amazing because a lot of people are under the impression that you can't change your brain, that as you get older, your brain cells die. And that is true. But what is also true and not talked about as much is the fact that your brain can change, evolve, grow, and adapt through the process of neuroplasticity. Go ahead and look it up if you want, but it's a real thing, and it's something that we're really just beginning to understand. Your brain is an amazing tool, and you can leverage that tool and make it even more amazing with one simple thing every day, okay? That's all I got to say. Good luck to you in making your reality better and making your mind more powerful. Be bold, stay strong, and let's all get smarter together. I'm DC Russ. Align mentality. Look me up or don't. And we'll catch you on the flip side. All right, take it easy.